Hi folks, this is Lee Gettess with the Market Sense for the week of October 23rd, 2012. The charts in the presentation come from the Trade Navigator software. First chart we'll look at is a rather long-term look at a weekly bond chart. As you can see, bonds have had a pretty good run-up starting in early 2011. The last couple of years have been a fairly nice upward move. Of course, the Fed's buying everything in sight. But I wanted you to get a perspective here. This entire sideways pattern that we're looking at for the last several months has still taken place above this big long sideways pattern that lasted several months here. We get the big rally up, then we go sideways, and then another leg up, and this sideways is taking place above this sideways. Now, it could come back into it and still be okay, but as long as it stays up here, this is a relatively bullish looking pattern that could turn and accelerate to the upside. I mean, I know it seems amazing to talk about bonds at 200, but this is suggesting that that's a possibility. Now, look, this could all be distribution, and they could just roll down out of here and take out these lows, and that'd be game over. But at this point, we're still looking like this is a relatively bullish long-term price pattern. Now, looking at a little more closely here, you can see we've found support at the lower moving average here in the 146.30 area, and they've actually not rallied as much as I thought they might have, especially given stocks have been selling off. The green line there is 148.12. They have not been able to make it up to that, although it certainly looks like that's what they want to do. If they can stretch it out either way, we've got 150 up here at the upper moving average, or they could dip down to 145.28. We do have a Fed meeting that they'll release the statement from the meeting adjourning Wednesday afternoon. I really don't know what the Fed could say that would surprise the market at all, but certainly their most recent quantitative easing has not had much of an impact, so maybe there'll be something contained in that report that'll jolt the markets. Otherwise, things are looking rather tight there. Now, in stocks, we've had a little breakdown that's been primarily driven by corporate earnings. They've broken down through support here, and we're looking at the possibility of them heading below 1400. Now, this mid-Keltner channel is just below 1400. It's like 1398.99. And I think the ideal situation would see them go down into this area somewhere, let's make it broad, let's call it below 1400, but around 1390, probably no lower. Right in that area, I think they could stage a bounce and come back up to the green line, which is, let's call it the 1440 area, or even back up to the red line, which is the 1460 area. And I'd even go so far as to say this breakdown followed by a move to new highs would make perfectly good sense to me. Now, once they get to new highs, I think they might be in trouble. But especially with the election coming up, that would kind of make some sense to me. But at this point, they are kind of rolling down. You can see the momentum's broken down here, and they are turning lower. They're in the vicinity of this congestion area back here. If they break this moving average and head down, they could be in serious trouble very quickly. I just don't think that's the case. I think we're probably looking at one more drive up. Whether it goes to new highs or not, I don't know, but I think they'll at least try to make one more move up, and that's what we'll be looking for. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see what we think.